You may have heard about BlockFi's problems with regulators and a data breach if you use BlockFi or trade in cryptocurrencies. In this video, we'll go into detail about what happened to BlockFi, what it means for its users, and how it affects the cryptocurrency business as a whole. You won't want to miss this important news, whether you use BlockFi or are just interested in the future of cryptocurrency in general. You are watching Crypto University, where you get all the latest content about crypto, NFTs, and the blockchain in a fun way. Make sure to watch the full video and like it if you want to see more of this content. A quick note, we will never ask for your number or personal information, and we will certainly not contact you on WhatsApp, so please be aware of the scams and the spam comments in the comments section. What is BlockFi? BlockFi is a popular and widely discussed company as of late. It's a place where users can trade cryptocurrencies, borrow money against their cryptocurrency holdings, and earn interest on their cryptocurrency holdings. However, BlockFi has recently faced some criticism, leaving many to question, what happened to BlockFi? This video will discuss the failure of BlockFi and its implications for the Bitcoin market. Now let me tell you some history of BlockFi. BlockFi was created in 2017 by Zach Prince and Flory Marquez. The organization became well known rapidly due to its ability to provide interest rates far greater than those offered by conventional financial institutions. Interest could be earned by BlockFi members on their cryptocurrency reserves. The annual percentage yield ranged from 6% to 8.6%, depending on the cryptocurrency. Borrow against one's cryptocurrency holdings was also an option, with interest rates beginning at 4.5%. The funding of BlockFi came from VC firms, angel investors, and other sources. The company secured $350 million from a Series D investment round in August 2021, with participation from Bain Capital Ventures and other institutional investors like DST Global, Pomp Investments, Tiger Global, Fidelity, and others. What happened to BlockFi? BlockFi was ordered to cease operations by the New Jersey Bureau of Securities in July 2021. According to the order, BlockFi was prohibited from opening new Bitcoin accounts for residents of New Jersey, since the company was selling unregistered stocks there. This was a major setback for BlockFi, as New Jersey is one of the most populous states. In an immediate response to the order, BlockFi stated that it disagreed with the Bureau's interpretation of the relevant laws and norms, and that it would vigorously defend itself against the allegations. The next time BlockFi made headlines was in September of 2021. This time it was because a security flaw exposed the private data of some of its customers. BlockFi soon responded, claiming it had taken measures to solve the problem and prevent any more occurrences, adding that about 5,000 people had been affected. BlockFi was already coping with the fallout from the cease and desist injunction when the data leak occurred. Concerns over the security of their personal information led some customers to question whether or not they should continue utilizing BlockFi services. BlockFi's response to allegations. What, therefore, is the next step? BlockFi has stated that it will continue to challenge the New Jersey Bureau of Securities' cease and desist order. According to rumors, BlockFi is also considering filing suit against the Bureau on the grounds that the order violates the company's constitutionally protected right to due process and equal protection under the law. The future of BlockFi is uncertain for its users. Some customers are concerned about the security of their data, while others worry that BlockFi will be unable to expand its operations into new markets as a result of the cease and desist order. Everyone in the Bitcoin industry is watching BlockFi closely. Companies operating in this space, which has been condemned for lacking enough regulation for some time, now can benefit from more specific regulations and guidelines, as demonstrated by the BlockFi case. User concerns. Users of BlockFi are understandably worried about the safety of their data following the latest data leak. Many users are frightened that their private data has been exposed, leaving them vulnerable to identity theft and other forms of cybercrime. Users have voiced their displeasure with BlockFi's handling of the hack and have raised concerns about the company's commitment to data security. The New Jersey Bureau of Securities cease and desist order has implications for BlockFi's ability to provide its services in New Jersey and potentially in other jurisdictions as well. BlockFi's ability to offer its high interest rates and other services could be seriously hampered if other states follow New Jersey's path. Now we've discussed the implications for the cryptocurrency industry at large. The consequences of the BlockFi case extend far beyond the realm of Bitcoin and its peers. The BlockFi case emphasizes the need for stronger regulatory monitoring, which has long been a worry due to the lack of clear norms and guidelines for organizations participating in the field. Further erosion of public confidence and slower business growth could result from more states filing cease and desist orders against Bitcoin companies. On the other hand, well-defined rules could lend credibility to the sector, drawing in more traditional investors and customers. Future for BlockFi and its users. BlockFi and its customers confront regulatory and security risks that make the future of the company and its users unclear. The New Jersey Bureau of Securities has issued a cease and desist order, but the corporation has stated its intention to contest the decision. BlockFi's users could be negatively impacted if the company is forced to drastically reduce its presence in New Jersey and possibly other states if it loses its legal challenge to the order. Investors in the impacted states may need to look elsewhere to earn competitive returns on their Bitcoin holdings if they can no longer use BlockFi. On the other hand, if BlockFi can challenge the injunction and keep running in New Jersey and other states, it may be able to win back the faith of its customers and keep expanding. New security measures have been implemented, and the company is extending identity theft protection to users who were affected by the latest data incident. How the Bitcoin sector develops and is regulated may have a lasting impact on BlockFi and its customers. BlockFi has a chance to find its footing if the cryptocurrency market keeps expanding and becoming a popular investment alternative. On the contrary, BlockFi and others in the business may have a hard time making it if regulatory scrutiny grows and investors become warier of the risks involved with Bitcoin investments. The startup BlockFi has been in the news for the wrong reasons recently. Both the New Jersey Bureau of Securities cease and desist order and the data breach had substantial effects on the business and its customers. In sum, the BlockFi case illustrates the difficulties encountered by the cryptocurrency sector as it develops and expands. As the business develops, it will need to find solutions to these problems and earn the confidence of customers and government officials. Thanks for watching, and I hope you found this video helpful. What do you think of today's video? Do leave a comment and like the video. Tell us what you want to learn about next. And be aware that the price prediction is according to the sources, but it should not be taken as financial advice. Don't forget to subscribe to the channel and come back for more price prediction videos like this one. Have a great day, and we'll see you in the next video.